Thank you for tuning in to this BQ Prime's earnings conversation with Bikaji. I'm joined by the company's CFO, Rishabh Jain, and Chief Operating Officer, Manoj Verma, to decode the June quarter performance and the outlook on profitability and growth for the quarters ahead. Thank you, gentlemen, for taking the time out. It was a pretty strong quarter. Net profit more than doubled to 41 crore. Revenues were up 15% to 482 crore. Margins stood at 13.6%. And we did see the stock react to all of that in the early trading session. Rishabh, I would like to know, now that the operating environment is sort of easing and other things like demand are also falling into place, what kind of revenue growth you're looking at for the entire fiscal?
Yeah, thank you very much. So largely we have grown at close to 15% volume growth in first quarter, right? And we want the same growth to be maintained in the over the year FY24. So our target is to be at 16 to 18% volume growth. Value is of course a factor of about price that we take in not, but yeah, volume growth we want that it's close to 16 to 18%. That's what our target is.
Okay, and what would be the factors driving this growth? What are the initiatives that you're taking, in order to drive a volume-led growth?
So two factors. One, of course, is the category growth. So you have to be in line with how category is growing. So we expect a double-digit category growth, right? And what we intend to do and the way inputting we have done for ourselves is that we would be growing at about 1.3x or 1.5x of the category growth. That's what helps us drive to this number of 16 to 18% growth.
Okay, and in terms of the revenue growth, what is your guidance there?
So revenue growth, if you look at the quarter one, if we look at, so revenue and volume growth are hand in hand, right? What we sense is that this year should be a little comfortable year, unlike yesteryears. So it should be more or less, plus minus in the same line, unless and until something major happens, then it's a different story altogether. And that's what guidance, therefore, is more important and relevant to give than on a volume base, 16 to 18% kind of a volume.
But in terms of the absolute numbers, what would be the revenue growth there?
So largely, last year we were doing close to 1970 crore rupees. So if we take volume growth as same, so close to 2200, 2250. That's what volume.
Revenue number will come.
All right. So we do see a lot of small players that were severely impacted during the COVID-19 are now recovering and now back in the form. So I have two questions here. So firstly, I would like to know how much do you intend to spend on the ad and promotions to stay ahead of the curve? And secondly, we are also seeing a lot of consolidation taking place. You recently took over Pujalalji as well. So do you expect to see more such activities in the space?
Yeah, so I think very right observation that during COVID times, a lot of the local and regional players had to pack their bags, which are now coming back. So the evolution is like you will see that these now regional and local players would impact more on the unorganized sector. That's what we feel. In fact, if you look at Nielsen data, so what's clearly coming out in terms of market share, they haven't made impact. In fact, they're only losing, right? So that's what is the trend. But certainly, with this prices cooling down, so that inflation impact coming down, therefore, they definitely have a room to grow, and which is what they're doing relatively better for what it was. That's the status on these regional local players.
Okay. And sir, you did not talk about the advertising and promotion, how much do you intend to spend?
Sure. So as we always have been saying that we are amongst the highest spender in the category. We'll continue to be in that space, and we have budgeted 2% on our ANC spends.
Okay. So this is for the entire fiscal, or are you talking about the upcoming quarter?
So this is for the fiscal year, quarter one. If we look at our spends was 1.25% kind of a stuff. There you will see the spike in quarter two and quarter three, which is the festive months. But at an annual level, it will be about 2%. That's what we have budgeted.
Got it. Rishabh, last time we spoke, you had guided for 100 to 150 basis points improvement in gross margins. So are you sticking to that target?
Yeah, of course, yes. So we are on track, and you will see last year our gross margin was close to 29%. In first quarter, we are done close to 23%. So we'll be on track, and that's what the full year target is. So we are on track on this.
Okay. And how has been the demand in July, like as we speak?
Sorry, I didn't get the question.
How has been the demand in July?
So July, if you look at the June and July, because of the bad monsoons, and you would have read and heard, so it was impacted. So it was a subdued stuff.
Okay. But the outlook for the festive season is bright, is it?
Yeah. So it's all, so no, we already have those plans in place, the production, sales team, all promotion, our advertising plans, everything is up. So we are excited, for this now festive season to come.
Great. All right. Your core ethnic snacks category, that is bhujia and namkeen, it's doing really well. But can you also take us through the performance of all the other categories like sweets, etc., how they have performed during the quarter?
So if we look at all our categories have done well, it's only papad, if you look at, which has delivered 1% growth. Now, papad, if I talk about, is a seasonal product. And what happens is that during monsoons, the consumption of papad comes down, production capacity comes down, because you do not have time to dry this papad. So that's the challenge. This time monsoons was very long and very bad. So that's what impacted adversely to our papad business and has resulted just 1% growth. In fact, we could not meet the demand. Also, we could not produce as much to meet the demand. That's what it is. Otherwise, Western snacks has grown close to 20%. If you look at ethnic snacks has done well. Sweets, there's a factor of last year it was an early Rakhi, so our sweets business started quarter 1 onwards, which this time is moved to the next month, and that's where it looks a little less. But again, it's a 10.5 or 7% growth. That's the kind of growth it is. Going forward, what we see that the plans what we have and the kind of growth we have been delivering, we'll be able to deliver the growth in the year to come.
Okay, and any new categories that you would like to enter?
So frozen, it's not a new category for us. We have been doing it for a while now. It's more in the exports market. By end of this year, we'll be able to set up our production unit and produce on our own. So I'm sure that will be one category which we'll start getting in. But yes, first our eyes will be on the export market.
Okay, and how much in terms of your exports revenue are you are targeting?
So exports currently, if we speak about, is about 3.6% to our overall revenue. And if we look at, say, by end of the year, this percentage contribution will be between 3.5 to 4% only to our overall business.
All right, got it. Rishabh, what is the kind of investments that we will be seeing for this fiscal in terms of your capacity expansion? You've already set up a few plants, so
Right.
if you can just take us to that.
So there are 2 plants which will come up in this year. One is in Raipur, that is CMU basically, and another one is in frozen. Frozen plant will come up by end of this calendar year. These 2 plants which will come up, also we have PLI commitment. So we'll close the PLI commitment by end of this financial year, and that's how we'll complete all the capex plans. So largely by end of this financial year, we'll have complete capacity to deliver next 3 years growth. That's what we plan. So we have done some early investment to cater to next 3 years growth.
Okay, and in terms of your retail distribution, what is the kind of expansion that you're looking there?
So we have identified focus states, so which is what will be our on top of our minds to grow and build these states, which are 4 from North India, so which is Haryana, Punjab, Delhi, UP, and 2 from South India, which is Karnataka and Telangana. So while we will, these states are poised to deliver a disproportionate growth, our eyes are also onto our core states, because that's where also we want to further build shares on this stuff. So that's how we're looking at it.
All right. Okay, I think that was all from my end. Thank you so much. It was a pleasure talking to both of you.
Thank you, Sisha.
Thank you. Thanks.